In this week's episode of the Stockscores Market Minutes, do you have the profitable trader mindset? I'll describe what that is. Plus, do my regular analysis of the markets, where are stocks, commodities, crypto headed in the next little while. And we'll look at the day trade of the week on NTRB. So, do you have the profitable trader mindset? Well, many traders approach the market like gamblers. They are looking for the big wins. They are reckless and they take on much more risk than they should because they're trying to hit those home runs. People that have been trading for a long time that make their living at it are not, if we can use the baseball metaphor, they're not swinging for home runs. They are simply trying to get on base. They are doing base hits, maybe hitting doubles once in a while. The odd time a big win will come along, but it's really about consistency. It's about consistently making those profits day after day, month after month. And not necessarily having a big win every day, but having 3 or 4 smaller wins that add up by the end of the month. It's all about driving toward consistency. And if you want to have one resolution for 2022, it's to not be reckless, but focus on trying to be consistent with your percentage profitability ratio. You want to be right consistently. You want to make profits day in and day out. Find a strategy that works over a large number of trades and then work on understanding and executing the strategy well. Have the winning mindset. Increase your risk only when you are successful. So start with a small amount of risk, then slowly increase your risk. That's how you can grow your earnings. Start with consistency at a small amount of risk so you can keep your emotions in check, and then slowly increase your risk as you find that success. All right, let's get into this week's regular market analysis, starting off with the US markets. And of course, with it being between Christmas and New Year's, volume was very light this past week. Not a lot of action. You can see we more or less just went sideways through most of the week. But the chart is relatively healthy, perhaps a little bit overextended. Wouldn't surprise me if we pull back a little bit on the S&P 500 early next week. But in the context of that long-term weekly chart, we're in a nice upward trend. We aren't really at the top of the channel, so we still have upside potential. And I think you have to call this market bullish long-term, but neutral short-term. Looking at the NASDAQ 100, and this is the daily chart, been stuck in a kind of a choppy sideways range for the last 2 months. Not unhealthy because the upward trend is still intact, just taking a little break after pretty good gains in 2021. On to the Russell 2000, which of course represents the small cap stocks. And I think this is a good representation of what retail traders are doing, because retail traders tend to focus on lower price stocks. They have the bigger potential for gains. And you can see that the IWM has been going sideways all year. It tried to break out, it failed, it held support. We talked about that in recent weeks. It's bounced back nicely. I think it probably starts to edge up towards resistance again. It's a sort of a neutral chart, not particularly good or bad just yet. On to the Canadian markets, and here is the TSX 60, which also is fairly quiet for most of the week, light volume, and I would call this a neutral chart in the short term, but that long-term time frame is still in the upward trend. We flirted with the upward trend line 2 weeks ago. We never closed below it, and so it's still relatively healthy, but you do need to watch, because we are building a potential for a falling top here. We need to watch for a break of that upward trend line. If that happens, then we'll get a little more defensive on Canadian stocks. The TSX Venture, which represents those microcap stocks in Canada, has bounced back a little bit in the last 2 weeks. And again, kind of a neutral chart. It stopped its downward trend in October, and it's been slowly building a base, but fairly volatile. So a good deal of uncertainty, but hopefully come January, things will start to pick up in terms of activity on the TSX Venture stocks. On to currencies. US dollar in that upward trend and been pulling back for the last couple of weeks, but still holding the upward trend line, so we can remain relatively optimistic on the US dollar. Not so much the case for cryptocurrencies. The short-term crypto upward trend line was broken about a month ago. The parabolic trend was broken about 2 months ago. And so the last area of support is that linear upward trend line, which we are just holding. I don't like the look of the Bitcoin chart right now. It's not terrible. It'll be, a little bit worse if it can break through that upward trend line. And then of course, if it breaks through that support line. So be relatively cautious with Bitcoin. Similar situation on Ethereum. Again, the parabolic trend was broken there. The first linear trend was broken about 4 weeks ago, but the longer term upward trend is still intact, and it actually has farther to fall before it hits that support zone. On to commodities, and gold had a little bit of action this week, but not enough to break the pessimistic cycle of falling tops. We tried to break that back there, and now we're tickling that downward trend line again, starting to build some rising bottoms, so that's somewhat encouraging. But until we can break this with some enthusiasm, with a jump in volume, which we don't see just yet, I would stay relatively neutral on gold. On oil, we've had that nice upward trend. It was one of the top performing sectors of 2021, and it is holding its long-term upward trend line. I think oil's probably headed sideways in the near term. I'll be concerned if we break down through that trend line, which has not happened yet. But if you keep watching this every week, I will let you know when it does happen. And finally, the fear chart. Very low fear right now as we go into the end of the year. Markets have stabilized. We had that little spike of fear at the end of November into December, and then a little bit in the middle of December, but it's pretty much quieted down again. So my ratings then, bullish on both time frames, bullish long-term on both US and Canadian stocks, neutral short-term. Gold neutral on both time frames. And oil, I remain long-term bullish, but short-term neutral. The markets traded with very light volume this past week, and it was stable. There was a few good stocks to trade every day, but it was more short-term trades that were working. I think the longer-term trades, we just don't have the market helping us for those just yet. We'll get a better sense of where investors want to take the markets early in January, when volume should increase as more investors start casting their vote again. They come back from their Christmas vacations, and you usually see market action pick up around the second week of January. Gold and oil are stable, but not a whole lot going on, not too exciting. And as I said, fear is low. All right, let's go on to the day trade of the week. And I always try to show an example of a stock that we traded in the Active Live service that we make available through Stockscores.com. And Active Live, we traded NTRB on Friday. And I'm going to show you two different setups on this stock. This was probably the hottest stock on Friday. And we pick up on it early because it gapped up to start the day with very abnormal. It was very abnormal in the pre-market as well. But of course, as always, if you watch this video with any regularity, you know that I look for my action candles, which is that little pink dot there. And when a stock gaps up, I'd like to see that second signal. So it gaps up, pulls back a little bit, and in this case, made the action candle. That would be our first entry signal. Pretty aggressive in this market. I'm not super excited about taking those. On this one, it was probably worth considering given how much strong volume there was in this stock. It was very actively traded and very abnormal. And so that gives it that wiggle room around the fact that it had that large gap, because we know that there's a big crowd there. And you can see on that trade, it went up nicely, finished the day at 8 times risk. So for every $615 of capital that you had to put into this trade, it actually made a very nice $820 gain, 133% return. But let's also look at this chart on a 1-minute time frame, because this is what I actually prefer to be doing right now. You can see that early entry there, but then the stock broke out from this little flag pattern right there. I believe it was at 10:12 Eastern time, and went for a nice little rip higher. And in this market, doing those hit and run trades, that trade only lasted about 20 minutes, even less. And to be in and out for $400 or $500 for every $100 of risk taken, that's a pretty good way to trade it as well. No market scans this week. There's just not a lot of action in the market, so we'll get back to that once market activity picks up. I want to wish you all the best of the holidays and a happy new year. I hope that you all have a prosperous 2022. If you've enjoyed this video, please click on the like button, leave a comment, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.